What's up YouTube, it's Louis here, hope you're all well. We're looking at Quant today on the daily time frame. If you remember from the last update, we were anticipating a pump towards the white 200 EMA, which we got, and we actually closed below it. But today we're trying to actually push through, and for us to believe in the continuation to the double bottom target over here, as well as the range high 130 to 134, sorry. If you want to see 130 to 134, we need to see a close today above $123, but we'll get into that on the lower time frames. Of course, we'll look at the lower time frames today, and of course, please do bump the algorithm by liking, subscribing and commenting, as we're almost at 5k subscribers on the road. So yeah, if we're turning on the drawings right now with the daily time frame, we have this double bottom and we're almost at the target. It's just what's not allowing us to get there at the moment is this 200 EMA. And of course, now you set this wick over here with the body close below the 200 EMA. It's all about today's daily candle close. If it actually closes above $123, this wick right here, I'm expecting continuation to the larger double bottom neckline, which is 128 to 134. This is like a brick wall essentially, guys. So draw this into your charts. We have a line already at 134 that extends to 150. So there's a 134 to 150 range, as we've had resistance in the past, which this could be your left shoulder out of the larger head and shoulders pattern, shoulder, head, shoulder potentially. And your resistance of that range is 134, which is also, we've got a tap over there. That's why I'm saying as we're coming up to the range high 134. That is decided by this on the left, range high, range low. That's why when we came down there, we bounced, because this was our support. You can see the wicks exactly on the same location. So we're following this, but also this was following something else over here. And our range high for this area was $150. Can we see over here? $150 as resistance as well as support. We had a little fake out over here, but you actually closed back in. If we zoom in, you closed outside, closed back in with a shooting star and a bearish engulfing with wicks to the top, so confirming 150 as resistance. So it's this range of resistance. Then we've got this 050, which is 140 to 0618, and which is 160. Guys, if Quant by some miracle manages to push through this, that is absolutely incredible. But again, as I explained, it's not done just yet. We've got this double bottom over here. At the moment, we're trying to break out, well, we have broken out of the smaller one down here, trying to get to the range high. What's in the way is the 200-day EMA, and we need to see a close above 123 to finish this pump to meet the target. The target is 125, but we're trying to get towards 128 to 134. This is resistance. We're now just going to take a look at the 15-minute time frame really quick. And if you remember, on the daily time frame, we were saying that we just need to see a daily candle close above $123. Equally, we're on the 15-minute time frame now. So consecutive 15-minute candle closes above this, flipping it into support, holding it in support. Yeah. That is going to be a signal for continuation to $125 double bottom target. And yeah, we're hoping that we can eventually head to the range high, $128 to $134, but expecting it to be key resistance, as I explained just after this. But yeah, it's a left shoulder out of the larger head and shoulders. So if I'm looking at this, I'm going to measure from the range high to the low over here. I'm just looking at this over here as the range of consolidation. We've got the high, we've got the low. As simple as wait for it to lose this or that, if you want to keep it simple. If you want to get a bit more advanced, again, 15-minute candle close above this. This is the easy one. 15-minute candle close and consecutive candle closes above it, holding it as support. Same for down here. Consecutive 15-minute candle closes below and holding it as resistance. Wicks going up here, wicks going down here. That is the easy way. And yeah, it's clear break, clear higher high and a clear lower low if you're breaking below this. If you want to get more advanced, then we'll get rid of this, put the fibs from the high to the low, and we've got this golden pocket over here. We know that the last layer of defense is the 786 fib, so we can still get rejected here. So of course, right now it's looking like we're trying to create the reversal wave. You almost did it here. We were trying to push into this and turn it into support to head up. It's not what should really happen. From here, you come down. So we're retracing, and so we're meant to continue lower like this. But you can see it keeps on holding these lows. It's not allowing it to do so. We've got some sort of triple bottom here. So that's why we started to go back up towards this golden pocket, this previous high. So we need to clear this. It looks like we're breaking these highs. So since coming down to here, we've been putting higher lows. we've been putting higher highs. So we've got this uptrend. We just need to continue above the 55 EMA, which we are, and the 20, which we are, and hold this 050 $120 on the 15-minute time frame. And yeah, max coming down to $119. Well, technically, you just can't break the low, 118. But yeah, let's just keep this trend with momentum. Let's stay above 119 on the 15-minute time frame. Something like this, and continue to the 786. This is our brick wall, guys. We need to see consecutive 15-minute candles above this, holding it as support, and only once we're holding $122 as support and breaking through 123, this is when I'm pretty certain we'll meet our double bottom target and head to the range highs. If that was clear enough as day for you guys. If not, then do the easy version, just wait for the break above 123. It's 125, but we're trying to get towards 128 to 134. This is resistance. It's our left shoulder resistance, so we need to be careful over here. Although we might start to break out, we need to be careful when we reach this point. Could it throw us back under the neckline and head us and push us back down? This is the next step that we need to keep our eye on over the next days. But don't worry, I will be here ready to update you. Of course, don't forget, if you're finding value in this video, to leave a comment underneath, and let's get on with it. So if we look to the left again, we've got this high over here, $169. This was also previously a descending triangle neckline, and it's tying in very close to the golden pocket, so it's just a little bit above, and we've got the 786 above. So if we were to break out of this double bottom, you can see it, when we bounced off the descending triangle support, we ran into the 786. So this is a key area of resistance that I'm interested in. It's literally the final layer of defense. This is what's going to decide if Quant is truly bullish. I know I just said, wow, if Quant can get through this absolute mess of 128 to 169, this is incredible, but it's only a first step. The next step is holding it as support. So we need to get through all of this mess, hold it as support, and take out this 786, because I do believe at first you're going to get a reaction, and it's from there. This reaction is going to either be very harsh and push us back below this mess, flip it back into resistance and continue lower. So this is going to be a long path. This is going to take months and months and months and months and months until we get our true decision, guys. Until, yeah, maybe the next 3 months, we're going to see if we are actually truly going up or down. So I will be here along the way every day and just reminding you of these potential scenarios. But yeah, what we want to avoid is that getting up to here and falling back under all of this mess and heading back down. This would be absolutely awful for Quant. What the bulls would need to see is a pump up to here and then flipping this big area over here into support and breaking that 786. Only then I can really truly say, yes, we're bullish, guys, and I'm confident in saying so. So what we need to do is take out $190, and unfortunately $190 is the target. Can you see we've got the double bottom over here? Even if we meet the aggressive target, which is from the wick to the neckline, that target's up here, which is the 786 fib. And again, this scenario can still happen from the 786 fib. So reason being, again, yeah, 786, this is the deepest retracement before you actually could continue the trend you were in. However, of course, when you meet a pattern's target, guys, and yeah, especially when we're in this downtrend, so to say, because we're still under these highs, So we're trying to kickstart this uptrend, but we're still below the highs. So still part of this larger downtrend. We're just trying to change that into an uptrend. We've got the higher lows at the moment. We're trying not to lose them. To not lose them, we need to put in this higher high. If we were to actually put in this lower high over here at the 786, because again, that's the target. When you meet a pattern's target, you usually creates a pattern in the opposite direction. So the expectation is if we even get up here, it's the aggressive target. Not that we should, but if it does, amazing. However, the pattern's target's now been met. It's still lower than the $230 high. We need to break above this purple line to flip things bullish. And so we're just expecting this to be a lower high. And so if that were to be a lower high and we don't find higher lows somewhere here, if we don't do this, That's what we need to do. We need to do that. If that's not the case and we lose this uptrending neckline of the head and shoulders, then this is where we could see $83. Again, I'm going to bring a big bounce. But yeah, this is where we could see this. And yeah, over the next year, it could be a long process of going down. It could take the whole year to go down there, or it could just be a whole year sideways and start to break out bullish. This is what I'm here for, to be part of the journey with you guys every single day and let you guys know of all the potential scenarios, so that we can, of course, protect capital at all costs, because that's all I'm here for, to protect capital and to make as much money as possible, and not to get manipulated, because if you do get manipulated, it's very possible you put your money on the line and you go ahead and lose it. So we don't want to go and do that too early. Let's wait for the true signs that this is actually 100% bullish, which is, again, push, exhaust, and then push through that, and then that's where we're pretty confident it's going to at least test here. But again, you need to push through here. You need to get above $300, and until then, technically it's not bullish, but again, you'd still be making higher highs. It's just probably eventually crashing again. It's just going to be a long process, and guys, I wish it was a straight line like this, but don't be disillusioned by all the bullish people, to be honest, guys. Again, I've been saying this is going to take like 2-3 years. If you want these feelings again, it's going to take 2-3 years from now. Thank you guys so much for watching. Please do share the video. We're almost at 5K, so do, of course, subscribe. And if you want to help me get those subscribers, do like and comment, because that's going to boost the algorithm. Thank you.